All right, welcome to the new Secrets of Trading episode, everybody. So today we're going to be talking about how you're going to be dealing with failures because it's part of any investment.
Yeah. No, listen, welcome guys. I hope you're all having a great day. We were actually just kind of discussing different subjects we wanted to go over today. And one of them I know a lot of people go through. I know everybody goes through. We go through it. Sharma and I both go through it. And that's taking losses, whether it's in trades, whether it's in life, hitting adversity, how to deal with that and understanding that it's going to happen and taking it for what it is and then moving forward with it. So one thing, like as traders, what I've noticed with a lot of especially beginner traders is they take trades not understanding what they're going to lose. Like they go into a trade and they're like, okay, I'm just going to risk odd amount of lot size, whatever it is, or they look at the percentage gain, but they're also not looking at the dollar amount that they're risking and if they're okay with losing that amount, right? That's what you got to be okay with. Also going along with probability of how much that trade is going to play through. But again, understanding what you're going to lose on that trade is probably the most important thing, because if you're in a trade that you're not okay with losing that dollar amount, you're going to start micromanaging that trade. I was actually doing it today, not because I wasn't okay with the dollar amount. It was just because the way candles were setting up. But you're going to end up micromanaging a trade. And if you're risking too much and you're not okay with that amount of money, you're going to end up just closing it way too early. You're going to cut off 50 way too early, not following the candles and the way candles are lining up in your actual system, your actual edge in the market. You're going to end up just micromanaging it and getting out. And then all of a sudden the move goes in your direction. When it comes to taking losses, you got to know as a trader, you're going to be taking losses. That's what I think every expert trader understands is they're going to take a loss, and that's part of the game, right? Most novice traders, most beginner traders go into a trade, they take a loss, and all of a sudden they're flustered. They're like, oh my God, I wasn't expecting to take a loss. They were so sure that that was going to play out, and it just didn't go their direction, right? And all of a sudden they're down 1%, 2%, 3%. Maybe they over risked, and then all of a sudden they're hitting their confidence pretty hard. And that's going to be hard on you, especially if you're a beginner trader. You don't know how to get out of that. You don't know how to stack good trades and stack good decisions in the market. You're going to dig yourself into a hole. So the first thing you want to do when you're going into a trade is understand what you're risking on that. Are you okay with it? And then also being able to manage the trade as well, being able to know that, like, okay, if the candle passes the opposite direction of this candle, I'm going to have to close 50. I'm going to have to close the full thing. But also, again, knowing that you're going to take the loss, knowing that it could happen at any time and you're going to have to do something about it, but it can happen at any time and you can lose that right away. Not every trader is going to be a winner. So that's just one thing that we wanted to touch on today is your loss is never an absolute loss as long as you can learn from it.
I think when you're talking about like micromanaging, I think part of it is when you start closing early and everything, it also, I don't know, like from a psychological perspective, somehow it gives people validation to continue looking for entries instead of just sticking to like that 2 attempt per, session kind of a rule that majority of the people have for themselves. And so if you close early, that's just your first trade, right? You're pretty much done. Now you have a second attempt. But I feel like for whatever reason, I'm not really sure, but like from a psychological perspective, I've seen many people do this where they will have one good trade, but they micromanage it too much, or maybe they close it in profits instead of loss, or a break even. They're probably just like 5-10 pips into profit, but they knew that their trade could go for longer. So now they just start looking for new entries and over trading. So I think from that perspective, it's very important to kind of stick to your rules, whatever it may be. And like Stefano said, you're gonna have losses, whether it's Forex, whether you're doing stock trading, whether you're flipping homes or whatever investments that you're trying to get into, there are going to be losses. Now, the main thing here is that with your next trades or your next investments, you're not trying to make back that loss, right? You've already lost that money. It's already gone. You're not going to make that money back. Now it's about, well, how do I come back to that break-even point with my account and then grow it from there, right? A lot of it just learning from your mistakes. You're never going to truly make, $500 that you just lost trading, right? But now it's all right, we already have a $500 loss. That means I'm already $500, below on my account. Now I need to kind of have better practices to build that account back. That's what the focus should be instead of trying to make that money back or that loss back. I think that's the consuming part for a lot of people too, where they get too consumed into that little part. I have a loss, I need to make that money back. Stop thinking about it like that, right? It's just like I need to keep growing my account from this point, whatever you're at.
Also, like having a plan for your trade. Like if you don't have a plan for your trade, you're gonna end up micromanaging it. But knowing that this is where I'm gonna close the full thing, this knowing that this is where I'm gonna close half of it. Having that in your, like today is a great example of a trade I took on GJ, which is what I was just talking about, where I kind of micromanaged it. My plan for that trade was an impulse entry as price created its bottom wick and passed the high of the previous 30-minute candle. It passed the high, but there was not enough volume in the market at that time before the 4 hour closed for it to push up. Right. So that's where I was managing on the lower time frames, knowing that, okay, we're rejecting this area. We don't have enough volume to push us through this area right now. So I'm going to be closing my full thing.
Yeah.
Now, back in my journal, what I was able to do is analyze and say, okay, I would have just closed 50 here instead of the full thing. I just didn't want to, end up rejecting that area and price just drops and takes me out. But again, having that exit plan, knowing exactly what you're going to do and your actual plan for the trade, this is supposed to be an impulse trade where price passes the high, shoots up, mirrors the move to the left, and I'm in and out. Or I secure and move my stops to break even and price just shoots up. But that's not what happens. So that's where you have to improvise a little bit during your trade, understanding the way your pair moves, being okay with all the decisions that you make in the market too, which is another very important subject for you to master.
Well, I think I further like confirmed this what you're talking about when I started like the real estate investing. And that's because usually when we're trading, right, it's like, well, this is more like a scalp, right? And then, or this more like a swing trade, and that's what you're getting in with. It's very hard for people to switch their bias, especially if you're a beginner, right? But if you're scalping, you have to be very quick with that. And then in general, you start to learn that regardless of whether you're scalping, swing trading, or position trading, or day trading, or whatever it is, you have to be very quick with switching up your bias. You need to recognize signs that, hey, I could make more money on this, or maybe I'm not going to make as much money as I was thinking I would. So when I started like real estate investing, like I would get a property and then right off the bat, it was like, okay, this property is solely for like wholesaling, or this property is solely for like, fix and flip, or this property is solely for like rental. But I learned this from like other real estate investors, and they like really helped me ingrain this in my head, where it's before you even get a property, you need to think of not that this is just for wholesaling, but look at the numbers and look at the different exit strategies. So maybe you could have a wholesaling property, right? But then you realize as you're talking to like other buyers or other investors that they're willing to offer you a lot more. So then that should click in your head that maybe if you made like one small little change in this house, whether it be flooring, paint, whatever, maybe like just $50,000, $60,000 worth of work, then you could probably make like a six-figure deal, right? Just doing it yourself. Maybe you're thinking that this is going to be a fix and flip, so you buy a property and you realize that there's a lot more work that needs to be done than you're comfortable doing, right? Maybe it's too much risk for you. So then switching your exit strategy to maybe I should wholesale this, so then somebody else who has experience or who has a little bit of more like risk that they can take. Maybe they take over this property and kind of make money off of it. Either way, I'm going to be making money on this property. It's just a matter of how much money I'm making. And so that really ingrained it even further and confirmed what you're talking about when it comes to trading, where it's when you're looking at it like a trade setup. Now it's understanding like, can this trade only go for those 10, 15 pips? Or is there a potential with volume kicking in with setups, coming to you and like the opportunities presenting themselves? Can this 10, 15 pips turn into maybe 20, 30 pips, or like, even 50 pips or 100 pips, 120 pips? Where's the potential? I think it comes back to what I say all the time, which is limitation of your trade.
I was
Understanding,
just thinking about that.
yeah, like
I
just
didn't want to interrupt you.
no, yeah, but that's pretty much like it comes back to, right? Understanding the limitation of your trade. Maybe you think it's a 50, 60 pip trade, but it ends up being like a 200 pip trade, right? And then a lot of people beat themselves over that. Or maybe you think, you try to be too optimistic and you think like, okay, this thing's just going to dump down for like 100 pips, but there's a volume for it. And then you start to micromanage. So what you would have gotten those 20, 30 pips, now you just closed out at like negative 10 pips, right? Instead of like properly looking at, well, maybe there's not enough volume right now, but how do I manage my trade so then I can still be a part of it? Or I'm not comfortable with this risk, let me just get out.
There's an interesting thing. I'm rereading Naked Forex, which I love. I've read that like 3 times already. He talks about like how expert traders and also the difference between expert and novice traders. But a big thing is expert traders, it's very difficult for them to teach what they do because
Mhm.
everything is so like automatic and key. And you were just talking about something with your real estate and getting out of a deal, knowing how to like kind of change the deal, whether it's a wholesale. Okay, buyers are offering me a little bit more than some investor would be. Maybe it's only like 10 grand for that property to wholesale it.
Yeah,
Um, and then you want to turn that into something else. And that's just intuition of that property or intuition of the market that you have with that. That's the same exact thing we talk about when it comes to intuition with your pair. Like there's certain things that like it's very difficult for us to explain or break down for somebody. We could break down everything till we're blue in the face, but there's certain things that make it very difficult for any kind of mentor or expert trader to explain to somebody that's more beginner or not novice. I don't want to say that, but just they don't have as much experience. So, keeping that in mind as a beginner trader, like there are certain things in the market that you're going to learn on your own as an expert trader as you gain more and more experience that you just can't explain. There's certain things that like the market's about to do and you got to exit that trade or the limitation of your
yeah,
trade and you have to get out. And it's not breaking rules, it's not anything like that. It's even difficult for me to explain that. It's
yeah,
just like you get it the more you see your setups every single day. And the
yeah.
more you study your previous journals, the more you backtest. It's gonna happen. And that's why we always say don't trade like 10 pairs at a time. Master one or two, and you're gonna get that intuition, especially during your session. You're gonna know exactly when to enter a trade, when to exit it, and when it's gonna push. Not everyone, but most of them, you're gonna know exactly what's gonna happen.
I think a lot of this comes with experience, but we did the video, like for example, on how important it is to have a mentor, not just in Forex and anything that you're trying to get into. But I think in Forex, particularly, if your mentor is able to do like live sessions with you guys, for example, 2, 3 times a week, if not every single day, but just showing up to these live sessions, now what you have is someone who's a lot more experienced than you. Trading live right in front of you, you get to see like how they're going to manage their trade because every single day is different in the
Yeah.
markets,
Yeah.
right? Some days like you'll catch scalps, some days you won't catch anything, some days you'll catch losses, things like that. But you have somebody who's there with you, even if it's over just Zoom, where you can see exactly what their thought process is. You can see exactly how they're going to be managing their trade. And then these are kind of things that you start to pick up and you start to learn and you start to learn how to implement it yourself. So I
Yeah.
think, there's a lot of, you are going to catch losses, there's no doubt about that. But now it's like, how do I bounce back from that? And it's these small details that come with experience, but also like by watching other people, it kind of helps speed up that learning process for you.
Yeah. And we both will be the first to tell you that you don't need a mentor to be successful in trading. You really don't need anybody. But if you want to get to where you want to be a lot quicker and you want to be able to, and what she was just saying with trading live in front of somebody, when we're trading live in front of you guys, that's literally our thought process going on in our head. We're just explaining it to you.
Yeah,
Like there's nothing more valuable than that. But there's another side of that coin where you got to ask questions. You got to send your charts. You got to like really be engaged in that. Like there's one side of it where you're watching us trade. Awesome. But now it's like, okay, what would I have done here? What would you have done here? Or, is this chart correct? Are my levels good?
yeah,
This was my trade. Can you look over it for me? That will get you so much farther, so much quicker. It's not even funny. Like I can't even explain how important that is. Again, you don't need a mentor to be successful, right? But if you want to get to where you want to be a lot quicker and you want to catch a lot less losses over time, because now you're learning from each loss and learning from somebody else who's been there and taking the same loss and taking the same win and taking the same exact setups, it's almost crucial.
it's a much
It's not
faster learning
it's
process.
it's key, I would
Yeah.
say. Not like you need it, but that's what I'm saying. Like you'd be doing yourself a disservice, and you're almost like losing time if you're not, using one.
Yeah. And I think that's the most valuable thing too, right? Over time, where you could, you are going to be successful. You are going to make losses. You are going to make a lot of profits too. But it's just that having that mentor or having that person with you is just going to make it a lot faster for you, the entire learning process. That's
Mm-hmm.
pretty much it. But I hope you guys were able to catch some nuggets in this episode. And as always, if you guys have any questions, feel free to reach out to either of us on Instagram. Mine's at SharmaFX. Stefanos is StefanosFX 28. And we will see you guys next week.
Have a good one, guys.